Hey everybody, apologies for the late night video, but in today's video I actually wanted to do an overview and cover some options flow data. I wanted to talk about some of the news that's going on, and I wanted to do some technicals on some tickers. So just starting with the options flow data, this might scare you guys a little bit, but if you're looking at this right here, you're basically seeing a wall of puts. But the three things that I really want to pay attention to are these ones that say the double A. So these ones that are highlighted right here is saying that when these people bought these put contracts, they paid above the asking price. So this immediately says, okay, bearish all over it. So these people were in a rush to kind of buy up all of these contracts, and they're looking at this mostly in the short term. So they're kind of pricing this in around OPEX of next month. But generally, what happens is that they'll kind of tank the markets before OPEX even happens, because they want to get out of these contracts, and they're not holding these all the way until expiration. Like, they rarely ever do that. They'll get out before that. So what we're kind of seeing right here is OPEX, and then we do see some that are going for next month OPEX. So they're giving themselves a little bit more time, and they're basically looking at 361, 360, and there's over 15 million in options premium. So these ones are kind of worrisome. So the one thing I do want to talk about on these option flow datas is that we never really know, when this is going to happen or how much it's actually going to fall. So just because the strike is 360 doesn't necessarily mean it's going to go all the way down to 360. They could, they could buy these and cover a lot sooner than SPY actually going down to 360. So that's one thing that I do want to talk about. And we don't really know if this is going to happen at the end of the month, at the start of the new month, or like a week before OPEX, or like the Monday of the OPEX week. We really don't know. So that's always the one thing that you have to think about. So I will talk about SPY technicals later, and we will go back to this options flow data right here. Now, I just want to go straight into the news. So we did get the Fed stress test today on the banks, and they basically said everything looks great. Now, I do want to talk a little about the stress test and what they're actually doing here. So for this bank stress test, they're essentially creating this hypothetical situation where literally they're looking at some of the worst situations that they could come up with. So here's kind of a list of what they came up with. So they're saying a 5.75 percentage point increase in the unemployment rate, a 3.5% fall in real GDP, a 4.75 percentage point increase in corporate BBB spreads, a 28.5% decline in housing prices, a 40% drop in commercial real estate prices, a 55% drop in the stock market. Yikes. A 7 percentage point decline in the inflation rate. So these are some of the metrics that they're doing like a hypothetical test on. Now, the one thing, you got to take with a little bit of a grain of salt is that, banks might kind of be foreseeing the stress test happening. So, they might put out less loans, and, they might be holding on to more assets during that time. So, maybe it's a little bit fabricated here. So that is kind of the one thing that you do have to take into consideration. Now, going straight on to the next piece of news, we got the U.S. jobless claims, or initial claims right here. And as you can see right here, we've started ticking up since this March area in 2022. So you can see by this trend right here that we're starting to tick up. So, clearly, we're seeing more jobless claims. So we will continue to monitor this, and it's likely to go up in my opinion, just given the situation of where we're at, and all these layoffs that are happening. So next thing I want to look at is we have this little piece of news right here, and let's just read the headline. So regulators move to lower credit card late fees that can rise with inflation. So, they haven't really done it yet, but they're kind of looking into it. And essentially, they're saying that regulators are concerned about the fees, and some places are paying as much as $41 for a late payment, and they're saying that this is a growing concern, and that these people don't have the best interest of their customers. So we'll kind of see how this story develops in the future. Now, the next thing I do want to cover is I just want to talk a little bit about oil prices. So we have this great website. It's called the EIA.gov. And essentially, this is the U.S. Energy Information Administration. And they put up all these amazing data points for us. Now, what I like to do is I like to look at the gasoline prices. So I could pull up this full history, and I could go into this Excel spreadsheet, and we can look at the oil prices. Now, this comes out every Monday. So every Monday at the start of a new week, they'll put out these prices right here. And we can see that basically since April 18th, oil prices in the US have basically just been going straight up. So it hasn't been getting any better recently. So as you can see here in June 6th, June 13th, 4.7, 4.84. And basically the next time we're going to get this is 7 days from this date, and it's going to be on a Monday. So basically next Monday we're going to get this. Or actually, see right here. Oh, we should have got this on the 20th. It's just lagging a little bit. So yeah, the data is kind of lagged, I guess. So we're not going to get it right away. But you can check it constantly and then see if that information does come up. So it does lag a little bit, as we just realized right now. But when that data does come out, we can kind of track it. And then maybe we could see an inflection point. But as of now, it's just constantly been going up. So, that doesn't make me feel all that great about inflation. And one of the reasons why I didn't feel that great about the last CPI, kind of going into it, was that the entire month of May, we can see gasoline prices just shooting up. And it's not just at this measly like 3 or 4 cents. It's literally, like we're going up 13 cents here. We're going up 16 cents here. We're going up 9 cents there. And then, we went a little bit right here, and then we just shot up here in June. So, this makes me a little bit worried for this next upcoming CPI, just given like the massive shot in oil prices right here. So that's basically me talking about oil prices. And we can also see the crude futures. So here on investing.com, I could go into the futures market, and I could look at this chart right here. So if I'm looking at this chart right here, we went all the way as high as 121.41 here in June. So here in June, we went this high, and then we've just faded pretty significantly. So went from 121.70 to where we are right now, 104.58. So the oil futures have definitely dropped a little bit. Now, do want to talk about U.S. home sales. So a lot of that data came out in this week, and it's actually going to continue to come out on Friday. So if we're just looking at U.S. existing home sales, we can kind of see this nice little chart right here, and it's kind of declining, as you guys can see. So we see these numbers right here, and we actually came in a little bit higher than the forecast did, But if we're looking at the previous actual, it was 5.61 million, but now it came in at 5.41 million. So overall, the trend is that it is declining, as we can see right here. Now, let's talk about US new home sales. So this data is actually going to come out tomorrow, and that's going to come out at 10 o'clock. And this is going by Eastern Standard Time. So right now they're forecasting 588,000. And as we can see right now, the trend has just been down. So it actually looks like we basically did like this double top right here, and then we faded hard right here. So, I know this isn't a stock chart, but, when I do see something like this, I can't help but think of a double top. So right now we did fade pretty hard, and, let's just see what this number comes out as. Are we going to fade even harder? So US new home sales, I mean, if we're declining, that's not really a good thing for the economy. Now, let's start talking about technicals here. So if we're looking at the Qs, it's we could be in for quite a bit of chop here just because of all these gaps that we're leaving. So if I'm looking right here on the day chart, we got this gap right here. It's around like 288. Got another gap right here, and it's basically around 299. So we'll see if we get up here. I mean, we definitely could. And if we do get up here and we fade, then what's that going to look like? It's going to look like essentially a lower high. But then the key thing that we want to look at is, do we make a lower low? And if we do make a lower low, where could that be? And I happen to think if we do make that lower low, it's going to fall right on this 200 weekly. And that 200 weekly is right at 261. So as you can see right here, we were pretty darn close to it. We were at like 269-ish was that low that we made right there. And yeah, we could have just fell a little bit more. I actually would have preferred it a little bit better if we just fell right there and then had a bounce. But as things go right now, the way that things could work out is we could have that gap fill, maybe we reject, and then that's when we make that low and hit the 200 weekly. So that is just kind of one of many projections that I'm making, and another projection could be something like, oh, hey, we actually peak above this. We hit this 50-day moving average. This 50-day moving average is right here at 305.76. And then we fade off. So that's another scenario. Or maybe, we rally all the way up here. We make a double top at 313.72. And then we fade. So, these are more bullish scenarios, but are still bearish. So essentially what I'm talking about here is how big is this bear rally going to be is basically what I'm trying to say here. And we also have this 20-day moving average, which is right here at 293.23. It kind of lines up with the beginning of this gap right there, or you could call it the end. So if we're going to the upside, this could act as resistance right here, which does happen to be the start of this gap or the end of it, whichever way you want to look at it. So that's QQQ. Now let's look at SPY. So if we're looking at those options flow data from earlier, they were basically calling for 360. So 360 would be, oh boy, we got to zoom out a little bit more. $360 would be right around there. So, is there a whole lot of significance there? I honestly wouldn't say so. But this is one thing that I am looking at right here. This gap. So this gap is a little bit scary to me. And you can see it a little bit more clearly when I go on this lower time frame. So when I'm going on this lower time frame, it's very, very clear that we made this massive gap right here. It could take us all the way back down to 367, and we have not filled that yet, you guys. So, this could get filled eventually. It's likely going to get filled. I mean, just given the market conditions. So if I am looking on this lower time frame as well, I mean, this does look like an inverse head and shoulders right here. So here is the left shoulder, here's the head, here's the right shoulder, and I do want to note, if I zoom in a little bit, we did break above this level right here. So here you can see that was the start of this gap. So we did break above it. So that is one slightly more bullish scenario. So we'll see, can we just have this massive rally, squeeze a ton of bears, and then, do we just close that gap right there? So that is always a scenario, but if we're looking at the yearly chart, that gap is going to be right there, that gap close. It's going to be right around 388.27. So here, if we do have that rally, we could just go all the way up here. And then do we make it to this next gap? I mean, that's the big question. Do we go back to this, it's basically 400. Let's just call it 400. Do we go back to this 400 level? And the kind of resistance that we have here is that we also run into this 20-day moving average, which is going to be at 392.95. So we could run into that. And then let's say we fill this gap and we start rallying a little bit more. I mean, do we hit this 50-day moving average, which is at 405.16? And if we do hit that and we reject, that's still a lower high, as you guys can see. So, those are kind of my scenarios. Or we could peak a little bit above this, and we could have that double top at 415.42. But, I'm not feeling that. I'm feeling like at the best, we could just do this. Like 400 right there. That's kind of what I'm feeling is at the best. And you know what? I guess I kind of lied. That's like second best. I would say at the best, we hit this 50-day moving average and then we reject. And then second best is, we fill this gap right here and we reject. So that's kind of my scenario for SPY here. And then I guess if we do fall a little bit, it would just be hitting this downtrend line again. And I do want to note that if I'm looking at this trend line right here, we did make it back above this. So this was a bear trap in the shorter term, complete bear trap in the short term. And if we go on the weekly, this 200 weekly could act as a very strong support. And right now it is sitting at 341. So watch out for that, you guys. It also happens to line up with my trend line right here, or the bottom of this trend channel. So we'll see. I mean, does this hold up or not? If it doesn't, then yeah, we're going to have a roll of pain. Now, let's see. I actually already talked about QQQ. We'll look at IWM. Now, IWM I probably think is probably the cruddiest out of all of these, just because of you don't really want to have a whole bunch of small caps in your portfolio going into just this kind of market, because small caps, they don't have as much assets, and they could be at a little bit more risk for bankruptcy, whether that is chapter 11 or chapter 7, but they're definitely in a little bit more risk. And if we're just looking at this chart right here, we got gaps all over the place. So we got a gap right here. If we wanted to close this gap, it's going to look like 177.60-ish. And then we have this 20-day moving average right here. So this 20-day moving average is right here at 178.24. Right above that, we have this 50-day moving average at 182.68. We also have the second gap fill. This second gap fill is going to be 183.57. So we could make it slightly above this 50-day moving average and then reject. We could hit this 50-day moving average and reject, or we could double top right here and reject. So as you guys can kind of tell, I'm a little bit more bearish. I'm definitely thinking this next rally, if it continues, is going to be just another bear rally. And keep in mind that we are going into earnings next month. So we're going to start off with the banks, and then we're going to go into Netflix, which is always just a struggle, and then that usually creates a lot of fear, and then basically across the board, all of these tech stocks do get hit if Netflix does not end up very well. And then you have all the big cap stocks near the end of the month. So that's it with IWM. And actually, I want to look at one more thing. So when I do look at IWM, we did close that gap right there, as you guys can see. So if I just zoom out right here on the 1-day chart, it's very clear we filled this gap right there, and now we're bouncing. But we still made that lower low. So where would the next area of pain be? I would say it's this gap right here, which we have never filled, as you guys can see. That is right around 153.60. If I go on the weekly chart, you guys can see that we actually broke underneath this 200. So pretty bearish in my opinion. So I do get a feeling that, filling that gap down there, which you guys saw on the day chart, could happen. XLE. So my thoughts on XLE is that we make it back to this 200-day moving average, and that is on the day chart. So we're looking at the 1 year. So if we look right here, we basically fell to the 200-day right there, and right there. So do we fall down to here again, which is at 65.45 and rebound, or do we fall down to this level and totally crash? So we'll kind of see, and we'll have to keep an eye on oil futures and oil policy going on here. So Tesla. Now, I don't know if you guys were there when I called that Tesla death cross, but it was it's about a month ago here. So a little bit more than a month ago, I was saying, hey, you know what? Tesla's going to have a death cross. It's going to have a death cross. And surely enough, it did happen. And you guys can see that we actually did a double bottom right here. So we have this nice little W pattern going on. We actually closed back above 700 today. So that is kind of surprising. Because as you guys can see, 700 should act as a pretty strong resistance level, because it's this bottom that we made here in February. So where can we actually go from here? I mean, as you guys can see, there's just a lot of chop right here. And I would think that there is this fair amount of resistance that shows up right around this 764 level if we actually do get to it. But before that, we are going to have some resistance here that shows itself right around 727-ish. So as you guys can see, got the death cross. We're below the strong trend right here. We broke out of this downtrend right here. We created this double bottom. And as you guys can see again, I'm going to have to zoom in here. We actually closed right above the 20-day moving average at 704.96. So we are starting to see this 20-day moving average actually curl to the upside, as you guys can see. But we are also having this 50-day curl down. So, do we just chop around a little bit? Maybe. But right now, I do think just in this environment, Tesla is just a little bit dangerous. And if we do break underneath this level right here, it could just be a waterfall straight down to 538. So do be careful with Tesla, especially if it breaks underneath this level, especially if it breaks underneath 700 as well. So here we're going to go on Apple. The most notable thing I see on Apple is this gap right here. So we did break above this gap. We filled this gap right here. We broke a little bit above it. Now the next gap area is going to be this 142. Let's see, what's like 142 71-ish right there. Also happens to line up with that doji right there, the body of that doji. Now, I am kind of surprised that we actually closed where we did, because that's actually above this pretty strong resistance level. It was prior support, as you guys can see right here and right there. So we actually closed above that. So to me, that's just a little bit slightly bullish, but you know, in this market, you never really know. We also have this 20-day moving average that is at 141.09. So that could be another area of resistance. So that's my chart on Apple. Google. So on Google, I have this trend channel drawn right here. And we are kind of at the top of this trend channel. And we did close above the 20-day moving average. Keep in mind that Google does have that stock split that's occurring next month. So we'll actually see where we go with that. But right now, kind of my worry is if we do break above this, my worry would be this gap fill area right here, which is right around 2,296. This 50-day moving average right here at 2,317. And this potential double top that we could be making at 2,379. Maybe a little bit higher, 2,385. So those are the kind of levels that I am worried about. And we do have that similar pattern where it does kind of look like a W, except we did make a higher low right here. So we'll see if we make a higher high, a lower high, or whatever we want to do. But if we do make that higher high, I do think that it could just be a quick pump for the stock split. And then, you know, maybe we could get a dump like with Amazon. Now, last thing I want to cover is Microsoft. If we're looking at Microsoft, I had this downtrend line and we were pretty well below it and things were looking really bad. But as you guys can see, we rallied very hard and we're back above this line. So the one very clear thing I see right here is this 20-day moving average could act as resistance. It's at 260.84. We do have this gap fill area. It goes to 264.59. And we've got this 50-day moving average right here at 267.73. So if we wanted to see a bearish scenario, you know, it would look something like, you know, us filling this gap, maybe hitting this 50-day moving average, and then rejecting. And then that will essentially be a lower high. And then if we make a lower low, I mean, where could that possibly be? I would say maybe right around here. So you guys can see this was prior support. And then, you know, we even had this little gap area right here. And then, you know, we had this massive move right here. So once we broke past this gap area, we had this massive move right there. So I would say right around 235.27 would be that next leg lower if we do hit it. And I hope you guys enjoyed this video. It was kind of a long one, but if you do enjoy it, you know, leave a like, a thumbs up, a comment, whatever, or a subscription. So have a great one, you guys, and I hope this video wasn't too late for you, and maybe you check it out in the morning.